Okay, so you've been holding GameStop all year. You've spent, your hard-earned money buying and holding. Let me show you how you can actually pay yourself now just for doing that in the first place. So, selling calls. Everyone loves to buy them, but there's a reason why options level 1 is selling covered calls and cash secured puts. Because in order to understand how level 2 works, buying calls, you need to understand how you can use your shares as a way of downside protection and a way to generate revenue in periods of consolidation, which I expect to happen for GameStop and AMC over the course of the next few months. Now, why do I think this? The data is there. I'm not just saying this. I didn't read a Reddit post. I read data. I looked at data. I downloaded data. I observed data. I looked at the options chain, the IV, looked at the max pain spreads versus the historical max pain spreads. It looks to me like we will be trading in a range between 110 and 130 for GameStop. Haven't looked too much into it for AMC, but I expect the same thing. Now, what can you do in this period of time? Can you go on Twitter, hype up a narrative to get everyone, jacked for no reason? Or can you actually put your shares to work and make a little bit of money and pay yourself back for all this time you've been waiting? You actually can. And to do it, it's one button difference from what you're already doing. So whenever you sell a call, it's the exact opposite of when you want to buy a call. So for example, let's say GameStop just tanked 10%, SSR's triggered for the following day, and it's below max pain. That's obviously a good time to buy a call. Now, the opposite is true when you want to sell a call. When's the ideal time to sell a call? When Twitter's hyping a narrative that doesn't make sense, with no evidence behind it, and after a run. So, considering GameStop's up 5.66% today, we can assume that the calls are also going to be up today for the weeklies, for the most part. This is on my phone. I don't know if I can see the last. But stock's up 5%. Let's go here. Yeah, we're up 28% on the $124 calls. So now what do? How do we solve this easy problem of how to make money with our shares without too much risk being involved? Now we go and verify max pain for this week. Weeklies in my opinion is the best way to do it. Let's go to GME. We can see here the weekly max pain is $121. Not much put support, a lot of call resistance. So now we go back to our chart here, and we can see that the stock is currently trading at 123.50. So as a person that's just starting out, kind of finicky about selling calls, maybe scared because of all the Reddit FUD and nonsense that was pushed last year to get you to not understand your options when it comes to options, that's okay. You can take it slow. Guess why? Let's go ahead and pick an option. So theoretically, if it were me and I wanted to sell and put up 100 of my shares, which I do every week, what was the max pain? It was 121, right? Well, you could, if you like to go by max pain, more experienced call seller could make $580 selling at the bid, which you should never do with calls, per 100 shares. I know people out there that are holding thousands of GameStop shares. That's a lot of money. Now, let's say we want to play it safe and we want to go out of the money. You can still make $350 per 100 shares that you own above max pain, selling it at $126 to expire this week. Now, considering we've been playing against max pain all year, why would you not do this? And the only way to do it, the only thing you have to do is hit sell. You see the price there. It's the same thing, one button difference. This is when you buy a call. This is when you sell a call. As long as just make sure it's not the same strike that you bought it at. You don't want to sell it. Make sure it's out of the money, above max pain. Hit sell. $350 credit. Reminds you right here, you are selling the right to buy 1 times 100 shares of GME at $126 per share by February 18th, 2022. You get $350 in credit. And if it expires worthless, if this call expires worthless by this Friday, you get to keep not only your 100 shares to redo this again next week, but you get $350 in your pocket, which equates to 2 point some odd shares of GME. So, money on the table. Are you going to take it, or are you going to keep leaving it there because of reasons? I would take it. I'm only trying to help.